Hi everyone. Today I'm super excited to introduce you with a very powerful feature which helps you to take the advantage of arbitrage opportunities in Indian stock market. If you understand there is always a gap between a spot market and future market, and if it is a significant gap, there must be a way to encash them. That's called the arbitrage opportunity. But for that, we should be informed timely, and thus we may be in need of some tools. And I'm sure that I can give you a demo, and interestingly I can give you some real life tradable opportunities at this moment. So this video is going to be a preview video for you to understand what this particular tool can help you to get advantage from the markets. And we're going to have a playlist which explains in and out of arbitrage. So in the name of arbitrage 101, we are planning to explain what is arbitrage, how you can make use of it, what are the pros and cons, in what way in some time it can be even risky, and we will explain everything one after one in that particular video. So if you are interested, make sure that you express your interest in the comment section, and we will certainly highlight that in the upcoming videos. Let me now show you that a real life tradable opportunities from that particular platform. So to get into this particular section, all you have to do is to get into our website called EQSIS.com. And if you get into it, you see a section called apps. And if you get into these apps, there is a section called primer. And to find that real life arbitrage opportunities, what you have to do is get into this research tool. And if you get into the section called a derivative screener, there we have a section called spot and future arbitrage. So if you get into it, it is a very simple table, but does the powerful work. I'll tell you what is there behind the screen. It gives you a few informations that the list of symbols which are there in spot market and derivative markets, thus there is a significant difference. We can take advantage out of it. And you see there is a couple of calendars being listed. One is a near month, which is very active, and we have a far next month, which may not be very active, but it provides a wild price discrepancy. So sometime that may be very interesting to take advantage of it. So in a way, we have a couple of calendars available here. Let me give you a quick demo to explain what it is. So let's take an example of a company like ACC. Okay, and if you look at a company, in this case ACC, what you see here is the spot price, which is currently trading at 1727.2, and whereas if you look at the future price, 1741.7. So you see there is a difference between spot price and future price, and this difference set to get converged and become same towards the end of this month on the expiry day, because on the expiry day the future will have the spot behavior, am I right? Because the same day is going to be settled, and logically the price is going to be converged and the future price gets settled with the spot underlying price. So now at present you see there is a differences between 1727 between 1741, that is about roughly 0.84%. So there is a 0.84% an advantage you can make out of it. How? Because you see the spot price is 27 rupees and future price is 41 rupees. So you can go and buy in spot, which is at 27, and you can sell it in 41, and you get an advantage out of it. So because by end of this month, the price is going to be same, either at 1700 or 1800. In spot, you see a slightly more gains than the futures. So eventually, end of the day, that you will end up making that particular difference in your favor. So the strategy, if you see that the future price is significantly higher, and all you have to do is to buy the spot and sell the futures. This is a concept. But what exactly this tool does? There is a section by which you can sort them. So if I hit the button, then it is getting scrolled. And I understand that this is from a tradable perspective that I got even Asian Paints, okay, having a 0.77%, but 0.77% for about 20 days. On one ground, it is an attractive returns over keeping your money idly in saving bank account. So what you can do is you can go there and buy them in spot, and you can sell them in futures, and you will certainly get this. But mind your cost, and there is something called lot size, so you have to be aware of it. So those details will be there in the playlist, but this is just a preview. And let me go quickly over here, and if I hit the button next basis again, and you see there is an indecent tower which shows that the spot price is 174 but the future price is 158. So in this case what you can do is logically that the future price is way cheaper than the spot price. In this case maybe there is an expected dividend, that may be the reason why the spot prices are way lower. I'm not getting in detail, but the point is you can go and sell the spot at 174 and buy them in futures at 158. But this is not possible for someone who's not owning a shares. Otherwise, you have to borrow and then you have to short sell it and then you have to make the advantage of it, which is getting a little complicated. For a common man who is already having a shares like Indus and Tower, he shouldn't be a quiet, rather he can sell everything in spot and buy them an equal quantum in the futures. And if he does that, he is selling something at 174 and he's been very sure of buying the same thing at 158.5. In this case, if a company gives a different dividend, he's missing it out. So those details I'll certainly take you through. So if you are such a person interested in this topic, so make sure that you convey your interest in the below comment section. And do remember, you have to hit the subscribe button and enable the notifications. Only then you will be notified with the playlist what we're going to come up, which explains the not just the glamorous aspect of the arbitrage, but also gives you the realistic way of making use of it, when to genuinely take the opportunities, when to avoid it. But that takes more time. So that's the reason why we are coming up with a playlist and explaining in about 5 videos, and probably will take a week, and we go a lot of features over you this. So make sure that you subscribe this particular one and enable the notification. Otherwise, no complaints that you're not getting the notifications. And okay, now coming back here, and there are a lot of companies, S-Cards. By any chance, if you don't have a company like Indecent Tower, S-Cards, a Polycab, India Mart, but there are other companies like LTTS, but you may be having a shares like Berger Paint, which is currently not having much of difference. But by any time such high differences need to be captured, you can actually make use of it. So what you guys can do is, you can go to this particular screen and go to the section called set alerts and hit the button. But at this moment you cannot, but you need to log into this area. So let me quickly log into my section here. So once you log in, it shows you an option to set reminders. So if you get into a set reminder section, you have high premium alerts. The high premium alerts is a concept at which, like, if you see a price difference, like in this particular tool at this moment, a significant difference is not over 0.79%. Okay. But if I'm a kind of trader who takes an advantage over 1% because of my cost structure or because of my opportunity interest cost. So if I want to take an advantage of at least 1%, okay, all you have to do is get into the section and set reminders, and there you go and say that 1%. Okay, and in this case, what happens is this particular platform understands that you are interested in taking an advantage of 1%, premium differences, and you want to trade it. So any company matching that particular meeting that particular criteria, you will be notified accordingly. Okay, and so once if it is active, then I may be reminded with this via my Telegram. So if you don't know how to set up a Telegram alerts, our platform will help you out. If not, you put it in the below comment section. We can help you with the right videos by which you can see them and enable your alerts. The point is, this is a common across the company, am I right? Because any company gives you a significant high premium, you can go them and buy it in spot market, you sell them in futures, and you are going to take advantage of it. But this requires a significant capital. There is another one. What you can do is, by any chance, if you have a company, let's say Bharti Airtel, and if you see there is a significant differences as a reverse arbitrage, I mean the future price is way lower than the spot price, that is the time you should be notified to sell Bharti Airtel and buy them in futures. So how do I set particular alerts? So what you do is go to this high discount alerts. If it is a high discount, you have to set the companies. Let's say I want to be notified with Bharti Airtel. Am I right? So I'm choosing this company called Bharti Airtel, and I'm setting up the alerts like about 1.5%. So if I see a Bharti Airtel price is 1.5% lower in future price over the spot price, then this will give me updated. And all I have to do is to set alerts even if I close my screen or if I go back some other platform to do my research, okay, and behind the screen our a server constantly understands there is any tradable opportunities and matching your requirements, and it will keep you updated with this. So thus, in a way that it is a very powerful feature and enables the traders to make advantage out of it. Hopefully you find this particular feature very useful, and if you are interested in learning the concept of arbitrage in detail, it is available in our playlist, and we are going to make it available soon. So make sure that you hit the subscribe button and enable the notification so that you will be conveyed. Happy that I'm being connected with you. Thank you.